What's going on, everyone? About 62% of stocks in the S&P 500 closed up in the green today, and we have a lot on the schedule for this week as there is a once-in-a-century hurricane barreling towards Florida right now, which is having a pretty big impact on certain areas of the market. At the same time, we are seeing Chinese stocks, believe it or not, finally start to pull back. At the same time, oil is doing its thing, and we have stocks moving in a pretty exciting way. So in today's video, we're going to cover all the most important news and information you need to know heading into the market for tomorrow. We have some great setups as well, and towards the end of today's video, we have a pretty interesting $810,000 big money trade. So stick with us all the way until the end, but besides that, Tom, let's jump right into it.
Yeah, the SPY actually started making pretty good strides towards the all-time high. Once again, we're only about $1 away from the high of day today. So the SPY starting to come back a bit, Mike. You know, going back to the heat map for a second, there were quite a few of the bigger tech stocks up in the green today by quite a bit. NVIDIA was up 4% again, and they're approaching their recent highs as well. But one thing that's a big worry right now is the hurricane, of course, right? Everybody is extremely worried about this hurricane that's going to end up affecting Florida around tomorrow morning. I'm hearing obviously as it gets closer, you guys can kind of see the scale of this hurricane on your screen right now. Like I'm circling where it is now. And over the next couple of days, it's going to be kind of heading this way. And this is the range that they're looking for this to land in. Obviously, this could end up having big implications on many parts of the market. Obviously, it'll cause fear. And then we also have some specific stocks that we looked at yesterday, Mike. Like some of these, I would say insurance stocks are probably on the highest on my radar, but then we also have stuff like Generac as well. And I would say that, obviously as it hits, I think more companies will start moving as well.
Yeah, and there's a lot that's associated with this situation, but one of the key things worth keeping in mind is that this hurricane is set to be a once-in-a-100-year type of event, so that's obviously not a good thing, and it's expected to cause as much as $175 billion in damage, and of course that is beyond horrible for multiple different reasons, and insurance companies are especially at risk in this situation, considering that we just had a recent Hurricane Helene, just recently as well in this same region of Florida. And because of that, I might not be in some of the later videos this week as well, depending on how bad the storm hits. But basically, in terms of a market-specific sense, like we talked about in yesterday's video, we have some stocks like Generac, which is a generator company, that is benefiting quite a bit off of this situation. As you could imagine, generators are certainly in high demand right now. This stock pulled back a little bit today, but still, it's still pretty extended and it's moving to the upside in a pretty strong way. But like you said, Tom, I think insurance companies are the main stocks to watch with this event, because if this storm does hit as bad as it's expected to, stocks like TRV, PGR, CB, AIG, ALL, and just insurance companies in general that have exposure to Florida have a lot to lose. So keep these stocks close on watch. We already saw a lot of selling with these stocks yesterday. Today they bounced up a little bit, but Tom, they're not looking too strong.
Yeah, they're really not. And, whenever you see some of these downtrends happen, keep in mind that yesterday was kind of the big day where that hurricane had got upgraded to the Category 5. And, of course, everybody got really freaked out yesterday. Now we're kind of seeing, a little bit of consolidation maybe before the storm hits. And pun not intended, but I guess it works out well in this situation. But nonetheless, the storm is going to be pretty rough. Prayers obviously go out to everybody who's going to be involved with this. Hopefully everybody takes the proper precautions and gets to shelter safely and everything like that. But yeah, these insurance stocks are definitely my favorites to keep an eye on, Mike. And I'm almost even worried about maybe some of the stocks that move up with fear also being affected, kind of like gold and silver, maybe as well. But of course, obviously, the weather can't really affect gold. It would just be more of like a fear situation there.
No doubt. And then another thing that we have to check back in on is what's going on with oil. Oil stocks have been blasting to the upside in the short term as tensions keep just getting worse and worse in the Middle East. And oil's in a spot right now where like the world is waiting to see how Israel is going to retaliate. And Israel isn't giving any signs about what they're actually going to do. Like U.S. military officials like basically straight up said like, you know, we haven't even been briefed about like what Israel's actually going to do. So everyone is just kind of sitting here waiting to see what's going to happen. And in turn, we saw some profit taking not only with crude oil today, but also with oil related stocks. So a pullback like this isn't that unexpected, especially given the news that we have. But at the same time, it's worth keeping in mind that the situation in the Middle East has only been getting worse and worse over the past year. And honestly, and unfortunately, it doesn't look like it's going to get better anytime soon. So again, continue to keep a close eye on oil and oil-related stocks like OXY, XOM, Chevron, which is CVX, and many others, because they have a lot to gain from increasing oil prices.
Yeah, they definitely do, Mike, and I really can't wait to see how oil plays out over the next couple days and couple of weeks, and I think it's really not done yet. You know, whenever a lot of people are obviously getting worried that this pullback is going to be like the end of the overall run, I feel like when you go to the daily chart of oil, you zoom out a little bit, you know, you really look at that support a lot harder, and you look at the range that it usually runs in when it bounces off this support. It's only right in the middle right now. You know, usually when it hits this support, we see a good move up into that 82 to like 85 range. And of course, in one scenario off this specific support, all the way up to 95. So, and we have a catalyst going on. So it's not like it's just like, you know, hey, it's a support bounce or anything like that. But I'm definitely watching this very closely, Mike. And over the next couple of days with crude oil, I'm going to really keep an eye on like the $70 to $72 support. If we see that end up holding with oil, that would be a great support to hold during this time of consolidation.
Absolutely. And when we have geopolitical situations just like we have now, that brings upon a lot of opportunity to trade oil and oil-related stocks in both directions. And just like we talked about with SHEL yesterday with the big money trade there, a lot of like the big bullish orders that I've seen with oil lately have a lot of time to them. Like this SHEL call play from yesterday has all the way out until April 17th of 2025. So it's like if you are trading this oil move, it's worth deeply like understanding that oil is not going to move in a linear way. This thing can consolidate for days at a time and then out of nowhere just rip to the upside once, you know, Israel actually retaliates. So like understand that as well, and understand the extreme importance of buying time and positioning yourself so that if the move happens slightly later than you originally anticipated it to happen in, that you can still win. So get time.
Yeah, it's very important here. And, you know, a lot of people are actually freaking out with some of the pullbacks going on. And I noticed a lot of unhealthy trading habits over the past day with these oil stocks pulling back. But just realize that these plays need to have time. I can't believe how much time the Shell play has, of course. I know like XOP, for example, is kind of, you know, it still has a lot of time too. Not quite as much, but it still goes out to December. So just make sure that you're giving these plays the time that they need and let it work out, because the overall setup is still there for crude oil. Even though there's going to be some chop along the way, no uptrend is necessarily, well, of course some are, but most of them aren't straight up.
Yeah, there's always exceptions, right, to everything in the stock market. So good stuff there, Tom, but we seriously need to check back in on what's going on with Chinese stocks, because they took a beating today. And when you look at BABA, it doesn't look all that great, but when you look at YINN, which is yin, which is a leveraged Chinese stock ETF, it looks brutal. The stock was down 30% today, and basically what we're seeing with Chinese stocks right now is a pullback. I feel like some people could have never envisioned this, right? Basically, Chinese stocks have just been ripping to the upside over like the past month or so, as the Chinese government is basically turning on the money printers and stimulating their economy. But it looks like they can definitely use some tips from the big man himself, Jerome Powell, because investors certainly weren't too pleased with what what they had to say recently. Essentially, everything is going good, at least they say, and that the Chinese government is set to hit their economic targets, which again is good news. But everyone's kind of freaking out right now because they did not announce even newer and bigger stimulus plans. So people are getting a little bit greedy here. And while this is causing a lot of panic in the short term, I still think that there will be good opportunity trading these stocks in a bullish way. But I don't think it's worth like jumping in to buy the dip just yet. I would like to see them calm down a little bit more because I think we can get a better deal in this situation.
I do too, Mike. A lot of people are looking to buy the dip right now off this first day move. And I'm like, wow, this is only day one. Hey, let's give this a little bit of time. Maybe let it play out for a few days. Let's see maybe if there can be some big supports tested. But these uptrends have been amazing, right? And to see BABA getting up into some of these major areas of support and a lot of these bigger stocks like JD and of course FXI and Queb breaking out, it's just insane to see how high some got. And of course, there's going to be these natural pullbacks mixed in. People are going to be looking at every little speck of news out of China over the next couple weeks. So expect more little things like this to end up coming out. I'm sure that there's going to be some economic data points and other things that we start to hear about. But as they pull back, Mike, like with FXI, for example, I'm really watching that $30 support. It pulled back really hard today. Even if it pulls back for a couple more days and hits 30, I think that would be like maybe a good range to look at. And then looking at BABA here, honestly, that $100 mark is pretty eye-catching there. Nice psychological level.
Absolutely. And whether you're looking at BABA, FXI, or any other Chinese stock, everyone's key question is, at what point is the dip worth buying? And of course, there's no like single perfect point, but I think the key thing to look for is a slow change in like price action. When we look at stocks like FXI intraday today, it was bad. Like the stock tried to run up, but it was bad. Once we see this sort of like fear-based panic selling start to shift and start to show actionable signs of reversing and moving back up, I think that's gonna be like some of the key signs to look out for. And I honestly don't expect that at least for a couple more days. So we'll continue to cover these stocks every day on the channel. Make sure to subscribe if you haven't already, because they move in crazy ways and there is a lot of opportunity associated with them. But again, we will keep them close on watch. But shifting back to U.S. markets, the S&P 500 actually had a pretty good day today, Tom, and we're still super close to all-time highs. So what do you have for us in terms of key levels and analysis?
Yeah, looking at the key levels here, SPY started to test that recent trend line along with some big resistance around that 573 to 574 mark today. So for tomorrow, I'm going to really watch the 574 and then 575 resistance. 575 is the recent all-time high. So if we end up breaking that, that'll be a great spot to watch where, of course, SPY will be popping up on tons of scanners and etc. as it breaks that high. But if we end up rejecting back down, there's a lot of big supports. Today was amazing. SPY ended up ripping above 570. I'm now going to use that as a support. 571 had a few pretty good bounces there, but below that, I'm watching 568 and 566 to the downside. Of course, Mike, we keep talking about that 566 area, but it just keeps holding up as it did once again this morning in pre-market.
And I think what that goes to show is that SPY is choppier than most people expect it to be, and it shows the extreme importance of following the money and trading where like the action is at. As we look at today's heat map, we could see that big tech stocks, or at least some of them, really led the way, especially stocks like Nvidia, AVGO, and just like other specific names. So I think it's seriously worth considering focusing on where the action's at and trading there, because when other areas of the market like SPY or even other stocks are just like not moving in the strongest way, there's opportunity with stocks in those situations, but it's a lot harder to trade. So like truly focusing on the momentum is a lot more beneficial than trying to fight chop.
Mike, you know what they say about chop. They're gonna chop your credit card in half, right? But we gotta love that Wolf of Wall Street quote. If you guys haven't seen that movie, you got to get out there and check it out. But yeah, sticking to where the money is, that's a great way to go. Today a lot of the cruise lines and airlines were even popping off throughout the day. I saw some stocks like Affirm were having pretty good days overall. So you can definitely find some good opportunities there, even on days where the market doesn't seem like it's doing much. But it wasn't very hard today, Mike, with NVIDIA moving. Whenever you get the most popular stock in the market running up 4%, that definitely drives in quite a bit of buyers out there. And, it was good to see tech kind of recovering back up today. Over the past few days, tech has been very choppy and kind of stuck down around these recent lows. So I was glad to see some of the breakouts from other stocks like, Microsoft and some of the larger names.
Big time. And then for tomorrow, we can't forget about the economic events and earnings on the lineup either. At 2 p.m. Eastern time, we have the FOMC minutes report, which can add some volatility into the markets. This isn't like the craziest event ever, but it will act as a nice recap of the previous interest rate decision meeting. And it does give investors deeper insights as to what exactly Fed members were thinking and discussing. But on another note, we also have a handful of stocks set to report tomorrow as well in terms of earnings. We have HELE, BYRN, and then a couple of other ones. Honestly, nothing too crazy. Most of the action will be on Thursday before open with Tilray, Delta, and Domino's, and then on Friday with all the big banks.
Yeah, I really can't wait for the banks on Friday. I will say the top stock here tomorrow and after hours has a pretty sus name going on there, Mike. But nonetheless, those banks are definitely going to be huge on Friday. And Mike, the banks, we've been watching them pretty closely lately. I noticed that in the short term, I think they've been picking back up a little bit. But whenever I go to the daily chart, like if JP Morgan ends up having a bad report here, we could see some pretty strong rejections off of these resistances. And I wouldn't be surprised to see some pretty large moves out of the banks. And I'm a little bit worried that they might try to, that they might have some bad forecasts that they're changing or something like that as the rate cuts come in.
Yep, we shall see. But besides that, let's jump right into the good stuff, which are some setups and predictions. A stock I'm watching very closely right now is PGR, and it is to the downside. Like we talked about earlier in the video, this is an insurance company that already started selling off ahead of the hurricane that is heading towards Florida. I would not be surprised if this stock sold off more over the next week or so, depending on how bad the damage is. But either way, this stock is definitely on my bearish radar.
Yeah, and a lot of the traders out there who are into these types of patterns, Mike, it's almost like a perfect head and shoulders type of pattern as well on the chart. And as we know, these insurance stocks have been getting pretty overextended in the short term anyways. So I would not be surprised to see more de-risking here. Why not, right? If you're up 200% on this over the past couple of years, why not take some profits up here and de-risk ahead of a really weird situation? With my next play or first play, I'm looking at Palantir to the upside. It's up 6.58% today, and it's getting very close to the all-time high that it made back on its COVID run back there, which is right around that $45 mark. And Mike, going over to the Bookmap, there's really not much in between the recent high and the all-time high up there around 45. But as you can tell, the $45 area is huge. There's a ton of sellers stacked there. In this case, 356,000 shares were there around the end of day today. So just keep in mind, we could see another run out of Palantir tomorrow towards that high, but just be careful as that $45 area approaches.
Sounds good. This stock has been booming lately, and I love to see it as a long-term shareholder of the company. So great stuff there. But another stock that's on my radar is Google, and it is to the downside. I talked about this stock yesterday, and it didn't really do too much today, but it's still in the broader bearish pattern where the stock is continuously making short-term lower highs, and its intraday price action has been pretty weak. So especially in the event we see some more profit taking in the market as a whole. I think Google has a lot of room to the downside. It would be great to see a break below the $163 area and for the stock to put constant pressure on its low of day. If that happens, I think this can make for a great bearish setup.
Yeah, it'd be awesome to see a move kind of like Monday, how it started really giving out there. And if we do see that 163 area break, I'll definitely have it on the radar too, as I could see some of these stocks falling down. With my next play, I'm looking at Royal Caribbean in the short term. The cruise lines and the airlines are really popping off. Royal Caribbean was up 2% today. If it ends up breaking above the key 185 mark tomorrow, I'm going to keep watching it up. But the cruise lines are doing great, Mike. I mean, whenever you look at Royal Caribbean in 2024 and a couple of the other cruise lines, they've done pretty well.
Yeah, so keep a close eye on these stocks as well. They certainly don't have as much hype and attention to them as other stocks, but they definitely have good moves. But besides that, Tom, it's now about that time for today's momentum plays. And with the first one, we have a hood to the upside.
Robinhood crushed it today, 9.82%. I'm going to keep watching it up. It broke above 25 today, which I was surprised to see. If it ends up breaking above 26 tomorrow, which is just above the high of day, then watch it to the upside.
All right, with the next one, we have Chewy also to the upside.
Yeah, we love Chewy, Mike, but they had a great move today, even 5.35%. They're right around recent resistance at $30. So if they're able to break 30, then watch Chewy up.
All right, and now with the last one, we have DJT also to the upside, and this one has been moving pretty crazy lately.
Yeah, it really has. 18% today. It had a great move yesterday as well, and for maybe the people out there asking themselves, hey, was there news with this? There actually was. It's moving because Elon Musk got on stage with Trump, and that's what everyone's attributing these moves to. So, take that for what you want. But either way, the stock's moving, Mike. If it ends up breaking out above $22 tomorrow, watch it back to the upside. I will say, though, if you're playing the options on this one, take some caution. The IV's at 200%, and the bid and ask spreads are pretty wide. So, just make sure that you're playing it right there. Do not get caught in a game with the spreads there.
Yep, so keep DJT, CHWY, and then HOOD all on watch for momentum style trades tomorrow. If and only if they break through the levels Tom listed, the stronger and more consistent these stocks move, the better and stronger the setups become. So keep them on watch. And besides that, it is now about that time for today's $810,000 big money trade, and we are looking at ticker symbol CLMT. Today, the big money put $810,000 into the 25 strike call options that expire on June 20th of 2025. So these options have a bunch of time to them, but this stock has been absolutely crushing it ever since COVID. Basically, the stock is now at the point where it is testing a major resistance level right around the $21 area. And honestly, I wouldn't be all that surprised if we saw a short-term rejection off this and then a later breakout. But anyways, continuing on, the stock has been just crushing it over the past couple of years, and it's still moving in a very strong way. For my advanced traders out there, this is technically a call-debit spread where they also shorted the 40 strike call options. But continuing on, I really like the way this stock has been moving. I like how the options have a lot of time to it, and I like how the option that was shorted at the 40 strike is pretty far out there. So it basically goes to show that the big money behind this trade is pricing in like a pretty big move in the event we do see like a full-on breakout.
Yeah, and we've actually seen this stock kind of stuck here in this big range for the past couple of years. And right now, it's right at the top of the range. It actually broke out above this range earlier this year, and it's kind of retesting it again. If we do see like a bigger breakout and maybe like a good run until another range starts to develop, that would be amazing for these calls, Mike. And of course, like you said, it is a spread with that 40 strike that they ended up shorting. So keep that in mind. But I will say, just keep in mind there's a lot of time here. There is short-term resistance. If we do end up seeing a short-term rejection, I know a lot of traders out there will probably get pretty worried. If this drops down to like $18 or something, they have so much time here that probably really wouldn't worry them too bad in this situation. So just let this play out, give it the time it needs. Of course, everybody has their stop losses, Mike, right? Of course, keep risk in check. Do not over leverage or anything, but you really want to try to give it as much time as possible.
Yeah, like with a trade like this, when it has all the way out until June, you either have to give it the time it needs or you're better off just trading something else. So whether you're looking at CLMT or oil stocks or Chinese stocks or hurricane stocks or whatever the case may be, volatility is increasing and there will be a lot of opportunities in the market, not only in the short term, but even throughout the rest of this year. But that doesn't mean anything if you don't put yourself in a position to win. I know we talked about this in yesterday's video, but it's just that important where we're going to talk about it again. The result of any trade you ever take should either be a small win, a big win, or a small loss. If you have big losses, that means that your stop loss is either too wide or your position size is too heavy. So adjusting for that and fixing that as soon as humanly possible is absolutely crucial. Of course, following the money is extremely important, but also keep in mind that it's very important to scale in and out of trades because nobody can sell at the exact top or buy at the exact bottom. Not even Warren Buffett or even all of these multi-billionaire market makers or hedge fund managers. It's impossible to sell and buy perfectly. So because of that, scaling in and scaling out is extremely beneficial, not only in terms of a strategic sense, but also in terms of an emotional sense. When you scale in and scale out, you're basically like psychologically like telling yourself that it's okay to, try to like not try and sell at the exact top and buy at the exact bottom. So consider implementing this more into your trading strategy. We cover this and a whole lot of other great trading habits in the key lessons channel in the Stocked Up Discord. So consider looking through those because oftentimes the most fundamental concepts are what truly need to be mastered before trying to get fancy with any more sophisticated trading strategies or anything like that. But with that being said, we do want to give a giant shout out today to a member of the Discord who crushed it lately, and that is Weasel Jr., and he posted some great profit screenshots in the Discord yesterday, and I really like the nice consistency of this chart, so keep on rolling.
Yeah, that's an awesome chart there. It's not all the time that you see, a nice $4,000 gain over the past week or something like that. A lot of the times, it's coming on one day, right? But, that's some very consistent trading there, Weasel. And hey, glad to have you in the community. I know you're new around here, but hey, keep posting up the great charts. Hopefully we keep seeing some great growth.
Absolutely. So if you guys are new to the channel and you haven't already subscribed, consider obliterating the subscribe button. We post brand new videos all the time and cover the most important news, information, events, chart setups, big money trades, and everything you have to know about the market in usually 20 to 25 minutes or less. So when you subscribe, you'll get our videos recommended to you more often. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.